Hey guys, there's a couple things I would like to point out to you. I don't know if I played it before, but there's a guy named Harry Dent, and he talked about, in the U.S. we had the baby boom, and that really prospered the U.S. for at least 40 years. Um, but now, all the baby boomers are retiring, and um, so I was just looking to see maybe what the next breakout country baby boom could be, and just peeking at this thing. I mean, it appears to be Africa, to be honest with you. But one thing I found interesting when I first started this video, Yemen used to have like 8 kids. Every woman used to have like 8 kids, and now they're over here at 4. I mean, right here in the 50s. I wonder what year the U.S. had their baby boom. I don't know exactly. It goes so fast, that's hard to. I can just look at it down here in North America. But man, they were pumping out the kids in Palestine and Yemen, Marshall Islands, Syria. I mean, the U.S. don't even make the rankings. They're down here at 4, and the top hundreds are over 5. I mean, here you still got Yemen up here at the top. They lost the top spot, but they're close. All right, you see North America is 4.31. All right, now it's going down 4. But in most of these countries are either in the Middle East or Africa, it looks like. Now we're in the 70s. Look at Yemen still on top. North America's at 3. 3 kids per female. Now we're under 3. I'm looking here at the bottom and it says North America. Now we're getting close to modern times. Look at Yemen still on the top. But I wonder what happens, because now they started going down, and they went from 8 down to 4. So I wonder what happened in Yemen. Alright, here's 2001, 2002. North America's at 2.26. So we're still positive, but just barely. Remember, in order to have a positive birth rate, you got to have at least, every woman has to have at least 2 kids. You see North America now is at 1.82. Alright, here we are, 2020, right around the COVID stuff. India is just barely positive too at 2.07. And you see Asia is below 2. And this is out into the future, guys. So this is 2040 now. I mean, this is 15 years into the future. We got Niger still on top. We got the Republic of Congo, Chad, Somalia, Mali. I'm not sure where CAR is. Angola, Benin, Nigeria, Tanzania, Burundi, which I think that movie Coming to America, the guy's like the Prince of Burundi. I could be wrong. Cote d'Ivoire, something, Senegal, Cameroon, Togo, Sudan, Burkina Faso, Mozambique, something, Congo, Zambia, Solomon, Samoa, Guinea, Gambia, Vanuatu, Afghanistan, something, South Sudan, Liberia, Uganda, Madagascar, Ethiopia, Guinea, something, Mali, Rwanda, French Guiana, Ghana, Iraq, Zimbabwe, Yemen. It's just surprising to me that Yemen had eight kids per female, and now they're down to 2.76. But now you see all these countries that have made the top 100 that are less than 1. I mean less than 2. So they're actually negative. I'm not sure how far this thing goes into the future. It looks like it goes to 2100. North America is still negative, but we got all these migrants crossing the border. And now you see Africa is just barely above 2. I mean, Niger is still up there with almost 4 kids per. But look at everyone else is negative. And these are just projections, so I mean, of course, these things can change. Nobody knows the future, really. I wish I was paying a little more attention to see like what China was doing early on. Because when it says Asia, I think that includes India as well. It's coming close to an end. Alright, here's 2,100. If we're still around then. All the countries around the world are negative. Even Africa is less than 2. But this kind of makes some crazy predictions. I mean, I do believe the home prices will fall. I'm not sure if they're going to fall 50%, but collapse is coming, 90%. Don't buy a house right now. Bubble's ready to burst.
One of the better things that I decided to do in my adult life was to see a therapist.
But I wanted to listen to this and get y'all's opinion.
Thank you for coming at this early. It is about our forecasting the future ahead. He is the author of the Great Boom in the 1990s. But this time,
Japan was the first country to see their large baby boom generation peak in spending and then tail off, way ahead of the United States. And South Korea is actually the last wealthy country in the world to see this peak in 2018. So we've seen a succession of countries, but we're getting to the point where now Europe is joining it, and after the United States. And so this is a worldwide phenomenon, and the baby boomers have created bubbles in everything because there's so many of them. They were called a pig moving through a python way back earlier. And really, Peter Drucker was the only management expert who foresaw the importance of demographics. Economists do not understand the importance of demographics.
Okay, let us more about it from you. The floor is yours. Would you kindly go to this podium?
I'll tell you a little secret. Long-term forecasting is actually very easy. It is the short term that is hard to predict. Now, most economists think the opposite. They will tell you, well, nobody can forecast the economy past the next election because they think that politicians and all their short-term decisions and all their stimulus and fiscal and monetary policies are the most important thing. What's important in the economy is people. And what people do is incredibly predictable. Now, the first people, before Peter Drucker, to understand demographics were life insurance actuaries. They can predict down to the decimal point when the average person in any country in the world is going to die. It's like 79.6 in the United States. I think it's 80 to 81 in South Korea. It's 84 in Japan. They're the longest living country. I don't know if it's the sushi, the sake, or what, but the seaweed, but they're doing something right in Japan. What I do is focus on everything in between. People have to be born before they can do anything, so that's where it starts. People are expensive when they're young. Anybody have kids that aren't expensive? Okay. Kids are expensive to raise. They are a cost. They're an investment in the future. But they're the innovators in new technologies and new trends. And then they enter the workforce and they become highly productive citizens. And they will peak at age 46 in the United States, age 47 in South Korea and Japan. They will then spend less the rest of their life. They will retire at age 63 on average. Now, I can tell people, for example, down to the smallest things, when the average household will spend the most money on potato chips. That is age 42. Do you know why that is? It's because in the United States, the average kid was born to the average parent when the parent was 28, and kids consume, medically proven, the most calories at age 14. That's demographics. Cradle to grave. I can tell you when people spend on every major sector of the economy. Automobiles, which is a big industry for South Korea. People spend the most money in the United States on automobiles at age 54. That is this year. That means auto sales in the United States are going to decline like home sales did previously in that country. So, it's not just the economy we can predict. It's cradle to grave spending. And it's very precise on average. When I say peak in spending is age 46, that's the average person. When a life insurance actuary says, I'm going to die at 79.6, that's the average person, not me. Averages make people predictable. So real quick, the point of my latest book is that we have this demographic cliff that keeps hitting more countries around the world, and nobody sees it coming. Do you think in Tokyo in 1989 that people thought there was going to be a multi-decade collapse in the economy, that the real estate bubble in Tokyo and around Japan was going to collapse 60%? 60% housing went down, and did it ever come back? Never. Still down 60% 24 years later. This is demographics. And in many countries I'll show, South Korea included, there isn't a large second generation, echo boom, millennial generation they call it, to follow to pick up that slack. Some countries it's higher. Some countries it's not. What I will show later on, and remember this, South Korea is like Japan on a 22-year lag. I've been telling people in the United States for decades, don't tell me housing can't go down, don't tell me our economy can't slow, don't tell me stocks can't go down. Look at Japan. They've already gone through what we went through before the United States, and Europe's about to go through it, and you're the last country. The advantage you have, you're the last country to see this demographic cliff in spending, and you can at least prepare for it and see it coming. So I'm going to start with Japan, this first chart. This is Japan's birth curve. What you see is there was a first peak before World War II in 1942. Births went down when everybody was away. And as soon as the soldiers came back, births spiked one more time into 1949 and then dropped drastically. I'm sitting in the late 80s looking at this chart saying, oh my God, Japan's going to have a huge downturn and nobody's going to see it coming. And I did predict that in 1989. Japan did go down. We predicted a 14-year downturn because of this curve. Look at the bounce after that. Their echo boom or millennial generation is not that large, and it will peak in 2020, just 4 or 5 years from now, and then they will see an even bigger downturn. Japan is a dying nation. Demographically, it's going to continue to decline, and they have no policy for encouraging immigration, and they have no policy or very little policy for encouraging women to have more kids, which is essential for the future.
Even though Bitcoin has shattered its previous record high, please do not buy it.
Now, I showed yesterday for people there, the United States, again, we just move forward. The birth index for the peak in spending, which I do here, correlates with the stock market very well, except for recently, in the last few years, when governments have pushed up markets by printing trillions and trillions of dollars, free money, zero interest rates, which is a short-term policy that will always, always backfire. You do not get something for nothing, at least in the world as I've experienced it. And that's what governments are doing. They're trying to prevent this decline. The more the consumers slow, the more they pump money in the economy to offset. But the United States was due to peak in 2007. I predicted that in the late 80s as well. And we've been fighting that decline ever since. We don't turn around and boom again until about 2023. And then the next generation coming, notice compared to Japan, we have a much larger echo boom generation. That's a good thing. But still does not bring us higher than the baby boom. The United States on a 46-year lag. Now this is how simple this is. The rising birth trends on a 46-year lag for peak spending would have told you way back that we have the greatest boom in history from 1983 to 2007, and then we would go into a decline. The next boom will never be as strong as the last one. Now this is going to be the surprise of the next several years. Germany has worse demographic trends into 2022, the next 7 or 8 years, than any country in the world, a steeper drop than Japan had in the 1990s. So I'm predicting Germany, who everybody thinks is the leading and strongest country, and they are the most financially sound in Europe. They have the worst demographic trends, even worse than Greece and other countries. Look at their echo baby boom. There almost isn't one. So countries that don't have kids don't have a future, because you have to be born to grow up and be a productive citizen. Here's Southern Europe, Italy, Spain, Greece, Portugal, all the countries that are doing so poorly. Same thing, a peak, a long decline with virtually no echo boom generation to pick the economy up later. Even when the world recovers from this downturn I'm predicting, Southern Europe, Japan, countries like that will have a hard time growing. Here is South Korea. Again, you're the last to peak. Your baby boom spending peak does not hit until 2018, 3 years from now. And you are the last wealthy country in the world to have your baby boom peak. But unfortunately,
Granted, this thing was in 2015.
you have a long decline with almost no echo boom. This country needs to encourage immigration, needs to encourage wider speaking and teaching in English, needs to help women with childcare. The best countries in the world now are subsidizing childcare because they don't want women to have a conflict between their career and having kids. And there's cultures, I hate to say it, like South Korea and Japan, where the men do not help the women, okay? In Sweden, they do. In the United States, they kind of do. Women need to feel like they can work and have 2 or 3 kids instead of maybe just 1. It is also a fact in demographics, and this is just a natural cycle. As people get more urban and more wealthy, they naturally have fewer kids because they cost more to raise. And you have more lifestyle opportunities when you live in a beautiful city like this with so much to do. So again, countries need to get hip. If you don't have more kids, if you don't encourage immigration, and now that we're living much longer than we used to, if you don't have people retire later, your workforce is going to shrink and your economy is going to shrink. Here's China. This is another big surprise. China is the only emerging country that has peaked in their workforce. Now, when I look at third world or emerging countries, I don't simply look at a 46, 47-year peak. I look at the size of the workforce because in these countries, they don't have nearly as high managerial, professional, technical jobs. So the income rise between somebody that's 20-something and 40-something is not nearly as steep. China is already peaked in their workforce, and after 2025, it goes down more steeply. China is not going to overtake the United States and become the largest country economically in the world. I predicted that. Economists were saying that for Japan in 1989. That was even more absurd because Japan didn't have the demographics to even have.
This is how you can get paid at least $50 an hour just for reading scripts into your phone for at least an hour a day.
Now here's the good news. Southeast Asia. Asia is going to be the greatest booming place in the future, especially the emerging countries. Here's Southeast Asia. Their spending and demographics go up into 2040 to 2050 and then only slow slightly. So this is going to be a great region for growth. This is the region countries like South Korea should be trying to attract immigrants from because you have a much higher standard of living here. India is going to be the country of the future. Mark my words on this. Their demographics are some of the steepest. They're going to be the largest population country in the world, surpassing China. They are still largely rural and have a lot of urbanization, and their spending goes up into about 2060, and again, only slowly tailors off. Now, when I look at emerging countries, and this is important.
So there you heard it. India might be a place to invest.
Because, as I said yesterday, the emerging world is where all the demographic growth is and all the urbanization. In a country that is largely still rural, it is the rate of urbanization that is the most important factor for economics because, and I've measured this in Brazil, China, and India, 3 of the largest emerging countries, if you simply move somebody from a rice paddy into a city like Seoul, and let's just say they become a taxi driver or something, no education change, their income triples roughly. So it's the greatest factor of growth. The reason China has grown so fast is they have moved 500 million people in 25 years from rural to urban areas. In fact, China has done this so fast, they're going to have the biggest crash in the world. China has grown too fast, has overbuilt its economy beyond imagination, and nobody sees that coming. Mark my words, your biggest threat in Korea is that one of your biggest customers, trade partners, China, is going to see the biggest bubble burst in modern history. But I look at urbanization, the rate of urbanization. You can look at India, they're only 33% urban. So they've got growth for decades and decades. I estimate they will continue to urbanize at least into 2070. And they will go from 4,000 GDP per capita to 13,000. There's a straight line relationship with urbanization and growth in GDP per capita. Economists don't get this either. Simplest damn thing in the world. and nobody sees it. Now, if I look at China, China is 56% urban and projects that it will be about 15,000 GDP per capita. Now, this is important. I know in the United States that most people walk around thinking the Chinese are going to be just like us. They're going to have 4,000 square foot houses, 2 big cars, a Cadillac, and all this sort of stuff. They're not. They will never be as rich as you are today. Never. Because only so many countries, and I'll look at this, make the transition from emerging to developed country, from low value added commodity industries into high value added industrial and technology industries. You made that transition. Japan made that transition. India has not. China has not, as much as they may seem to. The richest country in Asia, emerging country, is Malaysia, and they project out to about 17,000 GDP per capita. Again, just for comparison, the United States is 52,000 and rising. Most developed countries are between 40 and 60,000 GDP per capita. Most important point, this was Japan's curve. Japan did not go up in a straight line with urbanization, went up in an S curve. So did Korea, exactly 25 years later. You are Japan on a 22-year lag. Their baby boom peaked 1949, yours peaked 1971. Everything, urbanization and growth in your economy. We have the biggest debt bubble in history, and when debts finally unravel, money disappears, and you get deflation. Look at China's growth. 3.5 times their GDP, debt has grown for decades. You can't do that without a crisis, as history always shows. Finally, I've got 4 major cycles. I've only talked about demographics. I got a geopolitical cycle, good for 18 years, bad for 18. We've got an innovation cycles when new technologies have their biggest impact, and a 10-year boom-bust cycle. For the first time since the 70s and 30s, all 4 of these cycles point down at the same time. I'm telling people, if we do not have a major global financial crisis in the next 4 to 5 years. Hi, Harry Dent here. For people who've read my books or heard me speak before, I have a radically different view of the economy and a whole different way of forecasting the future. And it revolves around demographics, the predictable things people do as they age. And what's so good about this is that
I want to listen to this one real quick. This was 3 weeks ago.
if I was going to keep any real estate, I would keep stuff in the multifamily kind of apartment rental sector, and I wouldn't even keep that myself, but that's the one sector I would consider keeping. Everything else in real estate, this real estate does not usually bubble like this. It didn't even in the roaring 20s, but lending...
That's kind of funny because Lacey Hunt said the multis, like the quadplexes and stuff are in trouble. Why? Because they basically put no money down. They got loans and during the pandemic for almost nothing, 2%. And a lot of those loans are due this year, and they're going to have to refinance at 7 or 8%.
Has been so free and exaggerated. Real estate will see the biggest downturn in history. Now, first of all, nobody expected in the last downturn, the average house went down 34% at the worst, and it took 6 years to do it, from 2006 to 12. So longer slide, longer to come out, but down 34%. Just to go back to support and just to erase the gains, just in this last final bubble, not the previous bubble, we would have to see the average house go down 50%. That is the biggest thing that's going to hurt the everyday household. The everyday household doesn't own a hell of a lot of stocks, okay? And they're not even in Bitcoin. And if they do, they're probably their kids, and and they want the kids to learn a lesson anyway. So I'm most concerned about real estate because Bitcoin will come back and go higher. okay? Stocks will not. I think we're seeing highs we won't see in most stocks, and we're seeing highs in most real estate we will not see in our lifetimes for people like, say, over 40 or 50. I don't think we'll see in the U.S. because we're now going to start slowing like Japan and other developed countries have, that sort of thing. But Bitcoin will come back because it's the next big thing. So I don't want to hold Bitcoin because I actually have a target of 3250 to 4100 on Bitcoin, or at least 10 to 11. If it gets there, then I'll start buying, okay? If you look at a stock chart, it goes 1, 2, 3, 4, 5 peak, and then when it crashes, it goes just back to the 4-wave low before the 5 peak. That's all Bitcoin would be doing, to go all the way down to 3250, just retesting the late 2018.
A good question is, how do I get started trading? A better question is, how do I profit today?
Welcome back to another episode of the Meet Kevin Show. Today, we have the honor of being here in Puerto Rico with Harry Dent. It has been over 2.5 years since we last talked.
Oh, it's been that long.
It's been so long, and you predicted a large market crash coming. Large market crash.
There's never been 2 tech bubbles in a row.
What do you mean it'll end all? Is it like a great reset, new currency, or what happens?
Okay, bubbles only come on these 45-year technology cycles, okay? They only come every other one about 90 years. So you go back 29, super bubble top. You go back before that, 1836 crashed into 1842. 42 low and the 32 low were 90 years apart, and this 2022 low. So that's a 90-year cycle. That's the only time you see bubbles. Bubbles aren't normal. They're only when things are so good, so long that people just go, well, we died and gone to heaven. Wow. That's when you get a bubble.
And that needs to correct to go back to normal, so to speak.
Yes. But once it crashes that bad, 29 to 32 was an 89% crash, okay? And that's in the Dow. And so I'm saying right in between, S&P 86%ish, NASDAQ 92, you average those two, that'll be like 89%. When it crashes that much, then people are so bared up that there's no way you're going to have a bubble for a long. People are going to remember that bubble and crash for decades.
Do you think people will feel that way, let's say in China, for example, where they've destroyed that real estate market? Will they ever trust real estate in China again?
Never. And one of my slogans is, real estate will never be the same. Normally, real estate doesn't bubble.
Right.
But this low interest rate, easy mortgage era, and then China coming along, the government just pretty much told developers, build the stuff and we'll just keep it going. We won't let it fall for long. Well, now it's crashing there.
So they won't trust the government.
And there's a lead bubble there. So that the whole real estate bubble peaked globally and has a lot of momentum down. And now the U.S. is following for the second time. The second time around, people are going to get even more bearish because people have been told and feel real estate's the one thing that can never go down that much because they ain't making no more of it. Baloney. Anything can bubble.
Wow. So what are you more bearish on, stocks or real estate, or both?
Okay. Stocks will always go down more than real estate, but for real estate, 34% was more than it went in the Great Depression. That was 26. Real estate doesn't bubble as much as stocks or crash as much, but this time it went more and it crashed more. But stocks, this bubble burst would be comparable to 1929 to 32, and that's why I'm expecting 80% plus.
And then we'll finally have deflation, I guess, but everybody will be out of a job, I'm guessing.
Yeah, and that's when you'll see deflation. And then deflation won't last long because we're in a longer term mild inflationary era. That's been the whole last century. But 32, we got depression, 32 to 33, and the whole 30s was, I think this will be deflationary for the next couple of years and then not. But the other thing is, though, we will not see inflation again. We're not going to see inflation come back and go to 9 or 10 or 20% again. This will wipe it out for good.
Because there are a lot of folks who say, well, things are going to get a little tougher in the economy, the Fed will cut. print money again, back to QE, that'll lead to more demand, therefore more inflation. You don't think so? Where's the break there?
Printing money is temporary, okay? That's not the major cause of inflation. The biggest inflation in history was 68 to 1980. That was one thing and one thing only. They didn't even print money back then, and they only ran minor deficits, okay? It was the baby boomers entering the workforce at great cumulative expense before they started to become productive and pay off that thing. So it was totally different. Workforce growth is the one and only thing that correlates with inflation, and that was the highest workforce growth in history. Wow. We will never see that repeat. We're older now, more mature, growing slower, having less and less babies. We'll never see the 70s again.
I mean, that's a good point. I mean, back in the 1950s, our population was 150 million. We're at like 340 now. We're not going to double that.
And that happened around the world. This was a global phenomenon. The U.S. just had kind of the biggest, most visible one. And actually, we have statistics on births and all this stuff, and immigration a lot better than a lot of countries. So it was more visible there. But this, and again, that happens, and I'll get even weirder. About every 250 years, you see a population explosion like that.
Oh, wow.
We will never see this again either. Not for a long time.
So until you see that, there won't be an inflationary boom again.
Well, the other thing, everything comes from births and immigration, which I can add immigrants into the birth index. It's a little more complicated, but I can do it accurately, okay? The birth index will tell you when you're going to have inflation not entering the workforce, when you're going to have the greatest booms, 46-year peak in spending, and now it's 47, and maybe one day it'll be 48, but that doesn't change that much. And when you'll see kind of deflationary as these people exit and retire. That's deflation. So young people are inflationary, middle age are productive as hell, and old people are deflationary when they die. That's the ultimate deflation is dying.
Oh, wow. It's morbid. Okay, so is the Fed going to save us? Janet Yellen says no recession.
No, because they already overreacted. You know what their mistake was? They were getting by with this. We just keep stimulating more. They did that since 2009. 13 years straight escalating stuff, but they did it just enough that they could get away with it. COVID happened, bam! They over panicked. This was a predictable 2-year influenza-like crisis. Why? And it's a natural one. Why not let the economy take a break? Okay? Because it needed to anyway. Nobody would have blamed them for it. Nope. They had to stimulate harder than ever, and they blew inflation to 9% overnight, and then they had to slam on the brakes, and that's why we've got this. So after that, they've tightened so much, they can't just turn around and say, oh, oops, we were wrong to overstimulate, now we're wrong to over-tighten, and now we're just going to overstimulate again. They're going to look like even worse fools than they already are.
Oh, so they won't save the day because they don't want to screw up their credibility even more.
Yeah. First of all, they've already blown. And I've been predicting the Fed will overdo this like a teenager steering on the road, learning and going off the road. And that's what they've done twice now. Overstimulate, over-tighten. Yeah. And they are not going to have credibility after this. And that's a good thing. They shouldn't be telling what the economy should be doing. They should be responding to the economy. If the economy needs a little more liquidity because of a war or a crisis or something, that's what they were invented to do. Not tell the economy that you have to grow every year, and if you don't, we're going to just grow for you.
Wow.
That's the most arrogant thing in history for a bunch of find me one guy in the Fed that's ever run a business. Academic people with PhDs deciding whether the economy should grow or not.
Wow.
That is a clown.
So where do we put our money? In gold and treasuries? What do we do?
Not gold. Early stages of this, like 2008, gold kind of holds up or trends up. When you see the real deflationary crash, which is what I think is coming in 2024.
Cash.
And it just crash.
Oh, yeah.
Okay. That's when gold goes down. Because if gold is saying, if they keep printing more money, we're getting inflation. And that's what Peter Schiff preaches.
Right.
And that's right. But once it turns down and goes to recession, you go quickly to deflation, and that does not favor gold. That favors cash and something much, much more, treasury bonds.
Wow.
The longer the duration, 10 is good, 30 is great.
So you just buy treasury.
You're locking in higher rates at the top of a mildly inflationary boom before you go into a deflationary crack, and those rates fall. And so that 30-year bond, I'm telling you, a 30-year treasury bond could double or more in the next year or two. You'll never see any investment do that.
Wow.
So that's the deflationary crisis hedge. If we were going to have a runaway inflation like Germany in 23, that's when you buy gold.
Wow, that's really interesting. So your investment is predicated on whether you believe there's inflation or deflation, and since you believe there'll be deflation.
Well, number one, just in history, 9 out of 10 downturns are deflationary when you go into recessions. Good. Only that hyperinflation in Germany was a difference. So that's much more rare.
What indicators are you seeing right now that are saying the recession is near?
Well, Bitcoin. Bitcoin already peaked. Bitcoin is not just some funny coin. In fact, the coin is just a mirage, okay? It's about restructuring all financial services and financial assets, and we're digitizing them, which is a huge thing, okay? But it has already started crashing, okay? It was at 69. It went down to 16. It bounced and then went to 48. And I've been telling people, this is it, folks. This is a bear market rally, and it's already turned down to 39. I think it's going to go to 3 to 5, and that's when I'll buy Bitcoin.
3 to 5,000.
3 to 5,000. Wow. You know what? That was only the low back in late 2018, early 2019, just a couple of years ago.
So we're back to that level, and you would go from treasuries to Bitcoin at that point?
Yes, that's right. If you had to do one thing and one thing only, I'd be in 30-year treasury bonds now, and then after this crash and things start to settle down, then I would go into Bitcoin only because it's the leading risk assets. I could also buy tech stocks, and other things.
When rates are down?
Yeah, and when we're getting ready to boom again.
Okay. So when rates come down, we're getting ready to boom again, that's when you want to be long tech stocks, Bitcoin, risk assets, real estate maybe?
And real estate again, yes. But now real estate, I have a phrase, real estate will never be the same. Because this is the second bubble of something that rarely bubbles, and the demographics in real estate just go down forever, okay?
What do you mean by that?
Well, because...
It's like, are we going to see...
No, it goes with it. We're all developed countries are peaking upon. This is the last great generation, the baby boom and the millennials. The demographic cycles just keep going down, and without new, larger generations, you don't even need real estate. You know what the difference in real estate, stocks, and anything else? It lasts forever. You build a house now, it's there 300 years from now. Ask people in Europe. They got a ton of 300-400-year-old houses.
They might build theirs a little more robust sometimes.
Yeah, they might fix them up. But they don't have to rebuild any houses. And we're never going to have to build a house again unless there's some new area in Arizona growing.
Do you think that people are going to concentrate into coastal regions and maybe central areas in the United States will become less valuable, or people are just going to go where the jobs are, or what real estate markets will do better than others?
Well, so far it's just the same trend. People have been moving into the southeast and in the southwest for warmer climates.
Warmer,
yeah. Okay. And so nobody's going to go back cold. And I literally see on the East Coast, it's been a long time because New York is the financial center, not the U.S., globally. I'm seeing that move to Miami.
Wow.
And I'm seeing crypto. I think crypto has, started in California. Now they're in Puerto Rico and they're in Miami. I think Miami is going to be the center for crypto. And crypto is really the leading edge of financial services.
Is San Francisco done for?
Yes, in that sense, yes. I mean, California was so strong. Well, the only strength there, we're also moving a long-term trend, east to west. So it's gone from Europe to Northeast to in the automobile age, the Midwest, and now in the computer age, West Coast. And it's moving on to Asia. So California stays strong because of that, but this crypto thing is not going to be centered in California.
Wow. Okay, so go long treasuries now. If you're a home buyer, do you go long 30-year mortgage or just don't buy right now?
Well, the good thing about a 30-year mortgage, you can lock it in before it gets too hard to get a mortgage. Because the rates will come down, but a lot of people won't be able to qualify if the economy gets as ugly as I'm seeing for the next few years.
Do you think we'll have mass layoffs?
Yes. How can you not?
How soon?
I think that starts in 2024. First of all, this tightening, it takes a year and a half to hit. So it was from early 2022 into July of 23 so far, and they may still do a little more. we're gonna feel that the most in the second half of 24, early 25.
Oh, the real pain
so
is
that's
coming.
when we see, are we really going, and when they say soft landing, I'm like, not a chance in hell, okay? We're gonna see we're gonna see it by the second half of this year, and then it'll take early 2025 before we realize how deep it is. I think it's gonna be deeper than 2008 and 9.
Do you think they'll substantially cut as soon as the first signs of that come to
Yeah,
mitigate that?
they will, but they're gonna look like really big idiots by then.
Wow. What about the election? Is Trump going to win?
You know what? What Trump should be rooting for is me. If I'm right about 2024,
He's in.
That's his biggest advantage, because the incumbent never
Yeah.
wins in a down economy. Now,
Right.
if it's just slow, then it's kind of like could go either way, and it depends on how Donald's legal troubles go. If this economy goes down sooner than later, like I'm thinking, I don't see how Biden has a chance. So if Haley doesn't knock him out, he's in.
Do you think
He
she has
would
a
be
chance?
in my scenario.
Okay. Does she have a chance?
I think she does.
Okay. Okay.
But not like. I mean, it's too much to overcome at this point. He's going to have a legal blow up that's even worse, and I wouldn't bet on that one.
So far, it seems like he's been a little Teflon Donnie, huh?
Yeah. I mean, and there is a lot, but in this time frame, I mean, he can hold it off. That's what good lawyers can always do.
Yeah.
I think it'd be hard.
And he could also be 100% innocent.
Yeah. Green. Shakeouts are part of the business cycle. They're not, oh my gosh, that's a flu that you got to avoid. That's the way economists teach it. Oh, this is a flu. We got to avoid this flu. No, sorry.
Go through it, in other words. Get stronger by going through the sickness.
Yes.
Okay.
Colds are good for the body. Flus are an attack from the outside. Colds are natural, normal things. When people get overly toxic, that you have to flush it out. That's what most colds are.
Wow. Okay.
And they shouldn't be stopped by, you know what they take to stop them? Heroin, codeine. Codeine is just a derivative of heroin,
Tylenol,
like every
codeine.
painkiller and suppressant in history.
Welcome to OCC Learning, an e-learning platform where investors can find realistic options
Wow. So, that's an interesting comparison. Okay, can you invest in China at all right now? I know we said no real estate, but what about the stocks? Alibaba's cheap.
Yeah, well, it's going to get cheaper. And when we come out of this, it will be better to invest in the stock market than real estate. I'm telling you, real estate's going to be a four-letter word, okay? But the thing people don't get about China, in the emerging world, they're urbanized. They're not just have a lot of young people going on spending.
Okay.
They're urbanized. Now, China is already 65% urban, has built enough empty real estate to house the other 87% past full urban. So they don't need to ever build. They're going to come out of this. They're not going to be able to go on another building spree because they're going to be filling up empty 22% houses for the next couple decades.
Wow.
So China's never going to have the type of boom they did again. And the next great boom, without question in my view, India is the next big thing. They're going to see 4 decades from coming out of this global downturn into 2065 or so that'll look like China from the early 80s to 2021.
Wow.
4
Wow.
decades. China went from 20 to 65% urban and 10 times their standard of living in that time period. Imagine if India, with even more people that are going to peak and grow later, while China is already on its shrinking curve like Japan, India is unquestionably the next big thing. And you know what? Even Indian economists don't agree with me on that.
Yeah, a lot of folks I hear, they say India doesn't have the infrastructure. It's too fragmented.
Yeah, exactly. Well, that's how you become a great country. You invest in infrastructure.
You fix it.
You urbanize. And India is 35% urban. And all they got to do is go from 0.5% urban per year increase to 1% more like China, and they're going to be on a tear. And they're going to build those infrastructures. That's the opportunity, not the limitation. No emerging country has good infrastructures. Go to Kenya, go to India. It's the ones that start to urbanize and put in those infrastructures that are going to have the greatest gain. India is the only large country that can still do this and be the next China. And learn from China's mistakes.
Fair. Would you start a business now or wait for the crash?
No, I would start. Good time to start a business. Small businesses do well
when larger bit or more established businesses, often large, are basically going through a downturn and restructuring. You say, oh, we don't need that, but it's shutting business. They can move into those areas that are opening up in the downturn and focus on it, and then come out the boom. And the larger companies will just get out of those industries and never be nimble enough to get back in. So this is a good time to start a business. Just look for a lot of the demographic areas and stuff. Everything from aging. I mean, nursing homes. Would I want to get in the nursing home business now? Oh my God, that's going to be the last thing baby boomers drive into a giant bubble peak. There'll never be enough nursing homes in the next 20, 30 years.
Nursing home hack? We got to start our startup. Any advice for people who take your advice in starting a business when it comes to employees or running companies, or what's your take?
Secret to early stage businesses: don't think you're going to knock the world over and the world's going to come running to you, even though you got the best thing. Okay, you're delusional. You may have the best thing, but it doesn't happen overnight. You have to test. You go for niche markets first. You go for the early adopters or the more affluent markets, whichever is most obvious first. Okay. You don't try to get to Homer Simpson.
Don't do everything. Okay.
And then you keep going with that, and you have to keep testing things and keep pulling back when something doesn't. You're finding what's going to work. Okay. You don't know what the consumer, these newer consumers, and they don't even know what they want until it gets tested. So too many small businesses think, oh, I got the Holy Grail, I got the great. They overinvest, overproduce, overmarket the product, and then by the time it finally really catches on, they're broke and they're out of business.
Wow.
So test, and know that you've got a big winner, but know you're going to have to prove it, and you're going to have to learn a lot and go through a lot of
Start small, iterate. If you feel resistance or something's not working, don't be afraid to flip-flop, as people say.
That's right. Reevaluate. And again, your advantage is you can be nimble. That's why large companies don't do well entering young new business. They're not experimenters. They're just about building scale and making it more efficient, lower cost. Yeah. No, you're about finding a new market and testing until you nail it, get that killer app with the killer people, and then they prove it for you. The people everybody looks at, the movie stars, the affluent, the rich, the people in Dorado, here in Puerto Rico, whatever, and then that gives it the credibility. Then everybody mainstream wants it. And it's just a matter of the cost coming down till they can get it, but they jump on easy.
Wow, okay. What about Elon Musk? Twitter, X, should he have bought it? Do you like him?
Yeah, I do. I think, he's a little bit naive at times and stuff, but I think he is like a Henry Ford type. He's an early stage innovator. And believe me, you know what innovators do? They make tons of mistakes. You know why they're good? They're willing to fail. And keep them from coming in too quick. Be defensive about that.
What about Andrew Tate? You ever hear much about him?
No, I don't as much.
Okay, all right. And is Gavin Newsom going to replace Joe Biden?
I have no idea. I don't follow politics, and I don't really care. All I can tell you is if this economy keeps weakening into 2024, which looks like the most likelihood, it'd be very, very hard for Joe Biden to get reelected, and he's not a dynamo in the first place.
What are the odds Jerome Powell comes out of this a hero?
Extremely low. He's already gone from one extreme, overstimulating, then forced into another extreme of over-tightening. This tightening is going to continue to hit until late 2024, early 2025, and nobody's going to know how much it's going to damage. But there's going to be more damage, even if he changes now and starts to stimulate again, which will look very foolish after flip-flopping stream twice. So he's not going to do that too fast. There's going to have to be literally a threat of a recession. Even then, it's going to take a year and a half for that stimulus to hit, and the old tightening still going to be hitting. So he is doomed from my point of view.
Wow, okay.
And you know what's good? It's good for me. He shouldn't be playing this role. They should not be in charge of whether the economy grows or not. They should be providing liquidity in crises.
Okay, so don't name your child after Jerome Powell.
Right.
What about other leading indicators people should look at other than Bitcoin?
Well, I mean, the small caps are also leading. They're down ahead of large cap.
Jobs.
I mean,
I guess it's lagging.
No, jobs are lagging too. No, I mean, that's really the best thing. That's what I'm focusing on.
Those two.
And Bitcoin just keeps falling here.
Okay. What else? What am I missing? What should I be asking? What do we need to tell the viewer?
Well, I would look at everything. This is a total financial asset bubble that we've never. The Roaring '20s was mostly stocks, okay, and things like that, and business. It wasn't real estate. Was not that much of a bubble. Commodities had peaked before that in 1920. Commodities weren't in a bubble, okay? It was majorly a stock and business bubble. This is the everything bubble of all time. There's more to bubble now. It's more global now. So this is everything: stocks, real estate, bonds. Bonds have been pushed down by stimulus, pushes down bond yields. They push down the risk-free bonds, and then that pushes down even the riskier bonds. And so everything's in a bubble, and everything has to burst together. And the secret is, when there is an everything bubble burst, there's only one thing that can survive it, and that is either cash, as you said earlier, or the highest quality long-term bonds, the U.S. Treasury bonds. Even a AAA corporate would do good, but not as great. Anything else, even a minus A or a B plus bond is going to go down in value, and stocks are going to crash, and junk bonds are going to crash.
Wow.
Junk bonds act just like stocks, pretty much.
How do people follow you?
HarryDent.com. I've got a free newsletter. I'll talk.
So there you go, guys. Talk about demographics and where you should be investing in right now.